All right, jean sales are riding a good deal of momentum into the crucial back-to-school selling season, at least from a Levi's perspective. Levi's is out with a better-than-expected quarter despite the broader consumer spending slowdown. Joining us now is Levi's CFO, Harmit Singh. Harmit, always good to snag some time with you, especially ahead of the weekend. So, okay, sales were up, margins were up, reaffirmed guidance, raised the dividend. I get it. But you did mention one thing on the earnings call that I have not heard from Levi's in a while, some weakness in the signature side of the business. Those sales down mid-single digits. I guess that's the business you play in at Walmart and to a lesser extent at Target. What's going on there? Is that the first sign of consumer spending pressure?
Well, good morning, Brian and Brad. Thanks for having me. As you said, we reported a great second quarter and reaffirmed our full year guidance, firing on most cylinders. The demand signal that we saw, despite all the uncertainty, including inflation, was fairly strong and broad-based across geographies, across channels, and across our three pillar brands, Levi's, Dockers, Beyond Yoga, also being accretive. To the question you asked about our Signature and Denizen business, which is a small piece of our business, is about mid-single digit in terms of overall contribution to sales. And we saw that it was down in the mid-single category. Really, I think seeing the pressure on the value-conscious consumer. Most of our business is Red Tab and Dockers and Beyond Yoga now, and that was really strong. The signal was strong, and that caused us to reaffirm guidance despite headwinds. We're not out of the woods. There are headwinds around FX, China lockdowns, our suspension of business in Russia, etc. But despite all that, we resisted a strong quarter and reaffirmed guidance and are returning more capital to our shareholders than ever before.
So that weakness in that value business, Harmit, that shouldn't be viewed as a leading indicator as we go into the back half of the year as pertains to other lines.
I think it's important to stay on top of it and be conscious of it. But overall, we see that the consumer is fairly strong. This is my sixth recession. What I do see happen as things come back is consumers turn to brands they trust. If they have a fewer dollars, they'll rather spend it on brands that they trust than others. And the Levi's brand has been the strongest, I think, in decades or ever. Dockers is humming, and Beyond Yoga is a wonderful brand. I think I'll give you some stats, Brian. MasterCard came out with their Master Pulse report, and retail spending in June was up over 9%. Apparel was up 13%. If you look at the jean market in the U.S. over the last 12 months, at the end of quarter two, it was up 19%, higher than apparel. We've done some interviews with consumers, and more consumers are wearing jeans back to the office or as to get back on their social rendezvous, etc. Globally, our survey says that more folks are wearing denim back in the office. People just want to employees just want their employees to get back to the office. And so dressing in more comfortable and with great brands like ours, I think makes a big difference.
Come back to the office, wear your jeans, maybe wear your jorts. I know Brian's not a jorts fan. I'm a little more jorts curious, if you will. But Harmit, I mean, as we think across, and one of my favorite statistics kind of that we've been able to glean insights from people like yourselves within this industry is the percentage of inventory that's actually being sold at full price. What does that look like for Levi's right now?
Yeah, I mean, it's pretty high. It's the highest it's been in a long time. And our gross margins reflected. Our gross margins in quarter two were a record for quarter two. They were flat to last year, which was also a record. And as we talked about gross margins for the year, our guidance talks about a 20 to 40 basis points increase year over year. And so, we're able to sell a lot. We are chasing inventory. In quarter two, we said we missed about 2% of sales, largely in the U.S. And inventory, it takes a longer time to get across, into the U.S., just longer lead times in supply chain. So we built inventory, largely core inventory that you can sell through seasons. So think 501, the 511s, et cetera. And so, our view is that, demand is strong and the consumer, is supporting the Levi's brand and Dockers and Beyond Yoga in a big way.
I mean, true story. A couple weeks ago, I walked into a Nordstrom store to buy a pair of Levi's for the first time in a while. I just haven't bought jeans in a while. I tried on 10 pairs of pants. There was just so many styles. I couldn't get one that just fit my highly athletic looking body. I mean, how can you reinvent this experience to make it easier for folks like me?
Yeah, you should send me your details and we'll make sure we have something for you. But to your point, it's something that we continue to work on. That's why we have the tailor shop in our stores, where you actually can go and they will help you get fitted on the right style. My true story on Nordstrom, about a year ago, I went to Nordstrom and I saw the Levi's pad along with the other competitors. So I asked the person on the floor, I said, how's it doing? He says, if I had my wish, the only product I would sell is Levi's. Just get me more styles, get me more fits. And that's the brand that, consumers want. So I'm glad you went in and asked for Levi's. And our relationship with Nordstrom is growing, like with other premium retailers. And so, hope to get you fitted in the right style soon, Brian. But thanks for trying it on.
You had the leather jacket last time. You got the jean jacket this time. So we're going to be waiting on the edge of our seats for the next jacket that you wear when you're with us. Harmit Singh, Levi Strauss Co. CFO. Thanks so much for the time today.
Thanks, Brad and Brian. And have a nice day.